Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the weekly bullish scenario where we're looking for an impulsive structure to the upside, patiently waiting for this wave 4, after which we expect continuation to the upside. The target area for this wave 4 is taken from the low of 2 to the potential high of 3 here, giving us an area between 63.3k and 53.3k, and the invalidation for this wave 4 is the 0.618 at 49.3k. Interesting support to the downside includes this weekly gap here on the weekly time frame, which is a gap between the low of this candle and the high of this weekly order block, giving us a weekly gap between 59.2k and 53k, which also is in confluence with the target area for this potential wave 4. Now with gaps, usually the first time you hit a gap you see some support, but if you start to close candles inside the gap, it increases the probabilities to fill the gap to the downside to 53k. More locally, in this bullish scenario, we are then looking for continuation, which means that in this wave 4, we are looking for corrective structures in this range, after which we look for continuation. The first structure that I like to show you is a WXY sideways double combo. In this scenario, we have our wave W, wave X, and we are looking for a wave Y to the downside. However, because wave X went above the 0.7 Fibonacci taken from the high to the low of wave W, probabilities are lower for this wave Y to also be a zigzag, and then a double zigzag WX and a wave Y. It increases the probabilities of a sideways double combo WXY, more sideways structures, where wave W in this case is then a zigzag. Wave W can only be a flat or a zigzag, but in this case it's counted as a zigzag, which means that wave Y cannot be a zigzag. It is either a flat structure or a triangle. Now for a flat structure, preferably your wave A is finishing above the low of wave W, for then a wave A, wave B, and then a wave C to the downside, hitting the common target area for a wave Y between the 1 and the 1.236 trend-based fib extension taken from the high to the low of W to the high of wave X, giving us a target area between 58.9k and 55.9k, or we are looking for a triangle structure here where we expect a continuation of the range and eventually continuation to the upside, with a minimum target for this wave Y being the 0.618, which we have almost touched, as you can see. In both cases, however, you would expect to see these highs taken before the low of wave W. The second scenario is a flat structure where we are looking for preferably an expanding flat, as that is the most common flat structure. We have a 3-wave move down in a wave A, we then look for a 3-wave move to the upside in a wave B, and a 5-wave impulsive move to the downside in a wave C. The most common target area for a wave B in a flat is the 1.236 to the 1.38 taken from the high to the low of A, as this is the target area for an expanding flat wave B, which is between 77k and 78.9k, after which we expect a wave C to the downside. The most common structure inside a wave B for a flat structure is a simple zigzag in an A, B, C, or a double zigzag in a WXY. In this scenario, we then have a finished A, B, C in W, looking for a finished X, and then eventually a Y to the upside, which then should be another zigzag A, B, C to the upside, creating a double zigzag WXY. However, for this double zigzag, I do keep an eye on the 0.7 taken from the low to the high of W, sitting at 64k, as preferably price is not hitting that 0.7. If it does reduce the probabilities for a double zigzag to the upside, and therefore it reduces the probabilities for a flat, increases the probabilities for the WXY I've just shown. If we go back to the weekly time frame, then the bearish scenario here is a flat structure as well. Wave A to the downside, wave B to the upside, and then we would be looking for a wave C to the downside. Currently, price is ranging between the 1 and the 105 Fibonacci taken from the high to the low, which is the common target area for a regular flat structure, wave A, wave B, and then a wave C to the downside for continuation. And the wave B expanding flat target area is between 98K and 121K, after which we expect a wave C to the downside. Now, a wave C in a flat can go below wave A, but in a running flat structure, it doesn't have to go below this wave A. It can also stop somewhere here around the 30, 40, 20K area. But above all, we first need to wait for strong weakness before we start talking about much lower targets. Inside this wave B, this yellow wave B, we are looking for a three-wave structure to the upside, which is the purple count that you see on the chart. Here we are then looking for a three-wave move to the upside in a zigzag in that yellow wave B. Now here we have an A 5-wave structure, B 3-wave, and then another 5-wave move towards the upside. For wave B, the 382 is a common target. And what's interesting is that on the linear chart, we hit the 382, after which price moved towards the upside. But on the logarithmic chart, you can see that the 382 has not been touched. And therefore, I would prefer the linear chart here. But if we then use the linear chart for the wave C extension, then we are already at the 2.618, taken from the low to the high of A to the low of B, which is very high for a wave C. It is a rare target, lowers the probabilities for a C, increases the probabilities for a wave 3. Has to be said that on the logarithmic chart, we are still between the 1 and the 1.618, which is a common target for C, but the problem is wave B didn't hit the 382, which is very rare. So the probabilities are not yet on the side for the logarithmic ABC here compared to the linear ABC. Now, if we are looking for downside, then we have to count impulsive structures to the downside locally, where this is the high, and we want to see an impulsive move towards the downside in a wave 1, 2, and eventually a wave 3. Now, in this scenario, that means that here we have to count either an impulse, a diagonal, or a double 1-2. Now, a double 1-2 is already invalidated, as then we needed a 1-2, 1-2, and then a big wave 3 to the downside. Instead, price moved towards the upside. So that leaves us with an impulse or a diagonal. But if you've seen the live stream yesterday, counting an impulse here is very difficult because of all the overlap, doesn't look nice at all. And if we think about diagonals, then all the time your wave 3 is very short compared to wave 1 and wave 5, and wave 3 is not allowed to be the shortest wave. So that also creates a difficult with regards to the diagonal, increasing probabilities that this is a 3-wave corrective structure and not an impulsive structure. If this would be an impulse to the downside in a wave 1 and we have a finished wave 2 and we're looking for a wave 3 to the downside for much lower prices, then locally, if this is the end of your wave 2, you need to start a new impulse in a 1, 2, 3, and then we look for lower prices. However, this wave 2 then hit the 886 twice, and the 886 taken from this high to the low in a wave 1, 2 continuation to the downside is a rare target for a wave 2, common target for a wave B, or a wave X, increasing probabilities that this move to the downside here is a corrective structure and not an impulsive structure. And in this case, probabilities would then be higher for an ABC, and then a wave A, B, and then a 5-wave move to the downside in a wave C. In this scenario, this wave C could either already be finished with the wick that we have over here, or one more move to the downside before then continuation. If I look at my support and resistance areas, then I do have some additional support down here between 62.9K and 61.8K. However, we are currently ranging on top of the value area low of the range. As you can see, there's a little bit of support here as well, sitting at 64.6K, touched once. Coming down here again increases probabilities to move to the downside and look for a reaction at the target box, as we are looking for proof of support. And resistance to the upside here is this box as well, sitting between 72.5K and 73.6K. When we look at the CVD divergences, we had some bearish CVD divergences locally. These already played out. And when you zoom out, you will see on the CVD chart that we have bullish CVD divergences pretty much everywhere. If I go to the 4-hour chart here on the AGGR chart, right, then you can see higher lows on price, lower lows on the CVD, bullish CVD divergences pretty much everywhere. Now that does support the weekly narrative of the high not being in, and we still look for higher prices to come. However, this here can also very much be a leading divergence where we continue the range, potentially still take lows before then at a later stage we get that bigger move to the upside. So I do prefer to keep an eye on the local CVD divergences, 15-minute, 5-minute CVD divergences, as these for me are more important. Now we have news this week. Yesterday we had some news here, but on Friday the 5th of April we also have news. Time is Central European time, 1:30 p.m. We have some high impact news here, so make sure you trade safe on a Friday. And then when we look at the probabilities of the different scenarios, and on the weekly time frame, the highest probability scenario is the bullish scenario, where we are looking for this wave 4 to form, a continuation of the range. And when we look at the 4-hour chart, which is the chart that you see in front of you at the moment, the highest probability scenario is the WXY or the flat scenario, where we continue the range sideways here. I didn't speak about a triangle because it is too early for me to talk about this. I will explain this in more detail in the live stream coming up later today, where then we would be looking for a triangle, but I like to wait for at least a wave D, and we don't have that wave D yet. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.